There is no doubt that discovering the best penny stocks to buy is a high-risk endeavor. This is especially true when purchasing solely speculative penny stocks. At the same time, there are some emerging companies with an appealing business inside the universe of penny stocks. Value creation can be enormous if these organizations consistently provide healthy results. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about high-potential penny stocks for a huge return. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 7. Polestar Automotive. To add to the list of probable high-return penny stocks to buy and hold, Polestar Automotive stock is another option. If the current state of the company continues to be optimistic, I anticipate that PSNY stock will generate returns of 10 times over the next 5 years. Polestar is still in the early stages of its expansion as an electric vehicle manufacturer. On the other hand, there are two significant advantages to take into consideration. In the first place, the company already has a presence in 27 nations throughout the world. A large addressable market is made available as a result of this. Number 6. Kinross Gold. Considering that the price of gold is currently trading close to $2,050 per ounce, it is not hard to see why investors should be optimistic about KGC stock. The price of gold is projected to continue its upward trajectory, given the presence of factors such as inflation, recession, and geopolitical tensions. A possible dovish tone on the part of the Federal Reserve will act as an additional catalyst for the price of gold to rise. Particularly with regard to Kinross Gold, the corporation possesses stable fundamentals. By the end of 2022, the corporation had accumulated a total liquidity buffer of $1.8 billion. $455 million were distributed to shareholders by the corporation in the previous year. As a result of the upward trend in gold prices, cash flows are projected to increase, which will result in strong dividend growth. In addition, Kinross has projected that its yearly production will be greater than 2 million ounces until the year 2025. It is expected that a higher realized gold price will result in an increase in cash flow, even if output remains unchanged. A number of geopolitical considerations resulted in Kinross being compelled to sell Russian holdings in 2022. Number 5. Waterdrop. The narrative of Waterdrop, which originates from the Chinese insurance industry, is rather fascinating. Over the past year, the price of DDG stock has increased by 88%. The stock is currently selling at a forward price-earnings ratio of 13.4, which indicates that valuations continue to be considered attractive. A brief summary of the situation is that Waterdrop is the most extensive independent third-party insurance platform in China. When the pandemic is over, there is a compelling argument for accelerating the adoption of a variety of insurance policies. The growth of Waterdrop is expected to be accelerated as a result of this. By the end of December 2022, the company had made available on its platform 775 different insurance policies. In comparison to the previous quarter, there was a 239% increase in the total number of insurance products. Over time, the premium that is earned through the platform will continue to increase as a result of the expansion of the product offering. The amount of cash and equivalents that Waterdrop had at the end of 2022 was $537 million. Number 4. AppHarvest. During the past year, AppHarvest stock has experienced a correction of 85% due to the disappointment of investors. The reasons include the depletion of cash and the dilution of stock. I would, however, take into consideration the possibility of gaining some exposure to the penny stock because there has been some encouraging business progress. AppHarvest is an agricultural technology company. The corporation asserts that it runs some of the biggest indoor farms in the world. The relevance of this farming approach has increased due to the fact that it demands 90% less water and produces a yield that is 30 times higher than that of conventional farming methods. From a growth point of view, it is important to take note of the following information. In 2022, AppHarvest increased the total farm area to 165 acres, which is a fourfold increase. In the latter part of the year, the majority of the expansion took place. As a result, the effects of the significant expansion will become apparent in the years 2023 and 2024. AppHarvest has completed a stock offering that resulted in the raising of $46 million. Number 3. Bitfarms. As the crypto winter comes to an end, there are a number of appealing investment options available in the cryptocurrency stock market. If the price of Bitcoin continues to rise, there will be stories of Bitcoin miners who have made several billions of dollars. As of the first 4 months of 2023, the stock of Bitfarms has increased by a staggering 160% overall. My opinion is that when viewed from a long-term perspective, the stock continues to be extremely cheap. In the year 2022, Bitfarms produced Bitcoin for an average direct cost of $10,000. This is the first good aspect of the situation. With the cryptocurrency market continuing its upward trend, it is anticipated that the low-cost producer will generate a healthy EBITDA margin in 2023. Additionally, as of April, Bitfarms indicated that their mining capacity was just 5 EH/s. There was a 52% increase in mining capacity as compared to the previous year. It is my expectation that capacity growth will continue to be sustained given the financial flexibility and potential upside of Bitcoin. Bitfarms declared a total debt liability of $23 million as of February 2023. Since June 2022, the corporation has successfully reduced its debt by 86%. As a result of the company's robust financial sheet, it is in a position to reap the benefits of the subsequent cryptocurrency bull market, which makes it one of the more intriguing penny stocks to potentially purchase. Number 2. Cronos Group. At the current price level, Cronos Group stock is one of the penny stocks that is among the most undervalued on the market. Taking into consideration the fundamentals, I am of the opinion that the most severe part of the downturn for CRON stock may have passed. From the point of view of the industry, it is anticipated that sales of cannabis in the United States will reach $71 billion in the year 2030. This assumes that there will be no changes made at the federal level. This indicates that the market that can be addressed is substantial and has a lot of possibility for expansion. In addition, it is important to point out that Cronos reported a year-on-year increase in revenue of 23% for the year 2022. Strong growth has been observed, and this growth has been linked to a reduction in losses at the EBITDA level. It is expected that losses will decrease even further as a result of cost-cutting measures and greater operating leverage. In addition, it is important to mention that Cronos had cash and equivalents totaling $878 million by the end of 2022. The financial flexibility of the organization is high, which allows for aggressive growth in both organic and inorganic ways. Number 1. Solid Power. It is my opinion that it would not be surprising to see returns of 10 or 20 times in Solid Power during the next few years. When it comes to the commercialization of solid-state batteries, it is presumed that the corporation is successful. One of the most powerful automobile companies in the world is supporting the company's research and development activities. The German automobile manufacturer BMW has entered into a contract with Solid Power to conduct research and development on solid-state batteries in parallel. In the course of the year, Solid Power will make electric vehicle cells accessible to automotive partners for the purpose of conducting valuation testing. As a significant catalyst for SLDP stock, the automobile qualifying procedure is a crucial factor. Solid Power had cash and equivalents totaling $496 million at the end of the year 2022, reflecting the company's financial situation. There is a significant amount of financial freedom available to pursue aggressive investments in activities related to research and development. Additionally, I do not see any significant equity dilution occurring within the next 18 months, which makes this one of the greatest penny stocks to take a chance on during this time period. That's the end of the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.